Hey, it's your real estate geek, Andrew Fannie here. So we're back with real estate trends for August 11th, 2017. Today's video is going to be very helpful to anybody that's out there in the market right now looking to buy a home that has student loan debts, car debts, credit card debts, or heck, any other kind of debts. So you may be wondering right about now is how is it going to be helpful to everybody? And I'll get into that in a moment. So if you haven't already done so, please give us those thumbs up, subscribe now, and share this video around. You never know who is going to be able to help. So let's get into the useful information. So Fannie Mae recently, and Fannie Mae for reference is the largest mortgage provider of US home loans, and they recently increased what's called a debt to income ratio ceiling. And they increased that rate on July 29th of 2017, so just a couple weeks ago essentially. And it went from 45% to 50%. To help you better understand what a debt to income ratio is, it's essentially a measure that loan officers use to determine your credit worthiness when also factoring your credit score and other factors into what type of loan is going to be best for you and what type of loan you're happy and comfortable with moving forward for the purchase of your new home. Specifically, your ability to repay that loan. So let's give you an example to help illustrate it a little bit. Let's say that you have an income of $5,000 a month, and underneath the old Fannie Mae policy that was previous to July 29th of 2017, the maximum amount was 45%. So essentially you could have a max the debt to income ratio off of your $5,000 of $2,250. So that would be your total principal, interest, taxes, insurance for your new home, and also any kind of credit card debts that you may have and student loan debts. With the new policy, it has actually increased to 50%. So your same $5,000 a month now can go up to $2,500 as a debt to income ratio amount that can be used 50% to cover all your expenses with your debts and your mortgage. So here's the thing. And this is just my opinion. I just want to be honest with you and share my honest opinion as a professional real estate consultant with you. Take it for what you will. Just take it with a grain of salt, my 2 cents. It's still best to factor that whenever you get your mortgage to factor and try to keep your maximum debt to income ratio around 30% to 35%. In the long run, it's going to be much better for you. Now, that being said, with escalating home prices and with absolutely skyrocketing student loan debts out there, it may be necessary to go up to 50%. If you're between that rock and a hard place in between getting a home now and facing the rising home prices in the United States and also facing rising interest rates, it may be best for you to go ahead and bite the bullet, chomp down, and do what you need to do to get into your home so you can begin building equity in yourself. It's just my opinion, take it for what you will. So the other thing to consider is that lenders are still going to be looking at a host of other criteria with your income, assets, and credit to determine your credit worthiness. Today's video is really about bringing it to light and sharing the information with you that yes, it has increased, and the debt to income ratio has increased, and it's going to make it a little bit easier for a lot of people to qualify, specifically with student loan debts. I know that's a really hard issue right now that many millennials are facing, and first-time homebuyers in general are facing if they have student loan debts or just credit card debts in general. You know, if you really want some more information about this, I would highly encourage you and highly recommend that you reach out to your local real estate consultant for more information and find a great local loan officer to chat with and see how this applies to you and how it can benefit you today. And just like we said at the beginning of this video, if you found this video useful, please go ahead and give me those thumbs up, share it around, because you never know who it's going to help, and subscribe today. Thank you so much. I'll see you next week. Enjoy an amazing day.